Assignment 918 is liquidity control. We have after the fourth quarter, we have, of course, our budget here, our inflow and our outflow, and then we have our accounts when the quarter has passed. And it's in fact very simple. We have the budget and we have the account and the difference. And when it comes to plus or minus, we do it like this. If it is good for the company or the liquidity, it's a plus. If it's a bad thing, it's a minus. Have a look here. Sales 2 months. The account is a higher amount than the budget. It's a good thing for the liquidity. Therefore, it's a plus. Here it's a minus. Let's take another example in the outflow. Other capacity cost. We expected this to be 150. We ended up with 140. That's a plus because it's good for our liquidity. And here we have the percentage. And here we take the difference and divide by the budget, not the account, but the budget, because that was our basis. And then we end up here with a minus of 550, the difference between inflow and outflow. And in the account, we have minus 50. That means we have a small plus of 5. We started with 180, our liquid funds. So we, in our budget, we expected our liquid funds end of the quarter to be 125, but we ended up with 130. That's a good thing. And we are asked for a few comments. And one of them is that you have them here. One of them is that the customers paid differently, but we had a small positive amount of 20 because they paid more than we expected. And then we have a minus of 30 here. That's an important amount because we in the budget didn't take into account that we needed to pay our startup stock. That was probably a mistake. Yeah.